We saw an increase in that revenue number, as I mentioned, 11.7%. Hospital division revenue increased by around 12.2%. Pretty strong period that was. Take us over some of the key aspects of the trading
Well,
period.
the most encouraging part about the turnover increase is a growth in activity. So we have a 5.4% growth in bed nights.
Yeah.
And that's on the back of both internal organic growth and as well as inherent demand in the South African market for private hospitalization. And so we're seeing across all the groups significant growth in activity in South Africa.
Growth in South Africa. I'd like to touch on the Nigerian healthcare group, where we heard in West Africa you had an agreement with the company. Not much said about, in fact, nothing said about this time round. Tell us about that agreement and whether it has actually fallen apart.
It has fallen apart. Regrettably, post our due diligence, we felt that the promises made in their business plan wouldn't be met in the timeframes that they were anticipating, and therefore we started to talk about adjustments to the purchase price, and they weren't keen on that. So we walked away from Nigeria.
Would then, I mean, Nigeria, is that the only foray that you were thinking of, or are you planning to dip your toes again?
Certainly the company believes in emerging market development, and so the East African hub, the West African hub, and recently we announced the acquisition of a 26% stake in an Indian group that has about 2,000 beds in the Delhi region, and we're very excited about that opportunity.
What kind of margins do you foresee in the rest of the African continent and even in the likes of India, given the fact that, of course, it is about infrastructure rollouts and we're starting to see great demand, but a very different scenario that could play out from a margin perspective?
Certainly, if we talk India specifically, the margin there would never achieve the 25-26% that we see in South Africa. So what we're really talking about there is between a 16 and 18% EBITDA margin.
Which is still relatively high because it's still in double digits. Any chance of improving that number?
I think the pricing elasticity that you see in South Africa is not quite as apparent. There you have most of the private healthcare spend is out-of-pocket expenditure, so chaps walk off the street and pay cash. So therefore the pricing dynamics are quite robust and rigorous, and I think pricing would be quite difficult to push in that market.
Over the period you also acquired a further 12.5% interest in the Middelburg private hospital, MidMed,
right,
as it's known. How is that asset now bedding down?
Fantastically. We've managed the facility for the last 10 years, so I think we know the asset quite well. These were associates of ours, and we therefore, we made the strategic decision to increase to a subsidiary, and we grew the 12%. We similarly have the opportunity in Durban to take up our 49% to between 60 and 70% of the Joint Medical Holdings Group in Durban, a 500-bed hospital group.
More acquisitions that you'll be looking for in South Africa?
South African market is a pretty mature market and quite difficult to do, and really the three groups have big market shares. So other than specific geographic patches where we have a gap in our network, very difficult. We don't envisage, and we're not forecasting an acquisition in the period ahead in South Africa.
What of occupancy rates? I think right now you're sitting at around 71% from a previous 69.5%, so you've still got a way to go to hit that 100. I mean, when do you target that anytime soon?
No, you never target 100%. The South African private healthcare market in particular is generally a cold case, and that means that's elective surgery, and Monday to Friday is your busy days. Saturday, Sunday, we have lower occupancy. So you would call a hospital full at approximately 75%.
But that said, you're also starting to increase your beds, and you're looking to expand that even further into 2012.
Absolutely. We increased our capacity over the last period by about 4%. We have 4% planned for next year, approximately 300 beds. And we hope to keep the occupancies where they are, because like any fixed cost business, the better your occupancy, the better your margin.
Absolutely. Looking at the likes of Netcare that is starting to delve into working with the Lesotho government, we know that it's a very interesting model right now, and it looks quite attractive because business partnering up with governments. We know that the NHI is quite hotly debated here in South Africa. Any plans afoot to embark on a similar strategy?
We would always look at opportunities like the Lesotho model. We think it's a good model. We think it's a way of achieving the objective of the government of Lesotho to look after their population. Regrettably, in South Africa at this stage, we talk about very little clinical opportunities. The PPPs that exist in our country are more about infrastructural management, so security, cleaning, catering, a bit of equipment maintenance, etc. So our core strengths are managing the clinical outputs of a facility, and that's where we'd be interested. But we would look elsewhere in Africa if the opportunity arose.